All right, everybody, welcome back to Matt Money. Today, I want to talk about nickel usage in electric vehicle batteries, and who better to have on the show than John Lee himself, CEO of FLYN Nickel Mining Corp, to lead us in the discussion and to talk about the current and future environment for nickel. You can find them on the OTC market QB at FLYNF or the TSX at FLYN. John Lee has over 20 years of M&A experience and has raised hundreds of millions of dollars on behalf of Silver Elephant and its spin-out companies. John, good evening for you. Good morning-ish for me. Please feel free to add anything I might have missed.
Not at all. Thank you, Matt, for the introduction. I think it's the first time I'm coming onto your program.
Yeah, so I just wanted to provide the audience a little bit of context on the macro environment for nickel right now. You and I were discussing backstage. The spot price of nickel spiked up in March, April timeframe due to the ongoing deglobalization of everybody.
Yes.
And it's quite down significantly since then, but still up modestly over the past 5 years. So we're currently sitting on a price of 21,000 per ton, metric ton,
Yes.
sorry. What is your interpretation of the recent price and retracement? And how do you see it going forward?
And real quick, provide a bit of background. I've been in the mining industry, the mining industry for 20 years. In the first 10 years as an investor, I was doing quite well. And then from 2010, I got into the mining industry and running a company almost as a hobby that turned into a full-time job. My specialization, Matt, is nickel. So I got into nickel 10 years ago, and I've probably been more active in the nickel than any other Canadian junior entrepreneurial CEO in all of Canada. I've acquired a number of nickel projects in Yukon, in Manitoba, in Ontario, and just recently in this project recently in Manitoba called Minago. I was early in the game for nickel before the advent of EV and before nickel's usage application in battery. It's really landed a new renaissance, a new life to nickel. When you talk about the market and its forecast and what happened, usually I like to start with the technical because you cannot really fly forward, looking forward. But one very famous trader said trading or investing without technical trends is like flying blind. And I have to agree with that because the technical trends is a capture of its essence of all the buying and selling coming all together. And if you look at, so if we dive into the nickel technical trend for a minute, nickel has spent more than a decade oscillating between $4 and $10 a pound. So that would be around that will be something around $10,000 to $20,000 a ton. About 3 years ago, Elon Musk, or 2019, about 2.5 years, 3 years ago, Elon Musk came out and say that mine is as much as nickel as you can. Don't worry about price. We're going to give you a big fat contract. And that really I think that is really sort of the epiphany reflection moment for nickel, even though EVs sort of momentum started a bit earlier than that. So that caught some people attention, not only in the nickel miners, because they're really sort of in their own business and producing a commodity or product and selling to the market. But I think we really got some speculators also got interested in it. So, and then fast forward about 2.5 years, and that really got myself sort of reinvigorated into nickel because I always given up on it. We divested all the nickel assets I acquired 10 years ago, about 2015. And then the inflection point came about 2.5 years later after Elon made that very famous quote. And all of a sudden in the middle of nowhere in March, it just happened to be FLYN Nickel's IPO debut. So it was very succinct timing. That nickel zoomed from $10 a pound or about $20,000 a ton, where we're looking at right now. Within a week, it went to $100,000 a ton or $50 a pound. This kind of action, I've been in the commodity mining industry for more than 20 years. It's absolutely unprecedented. Well, outside of oil went down to zero or negative in COVID. But I mean, those two events together are unprecedented. It's even more spectacular in the ferociousness of the ascent, faster than cobalt in 2019 from about $10 to $40. Also somewhat related to EV. And also this is faster and more violent than say palladium. that went from $800 an ounce to about $2,300 back in about late 2018. That was due to the Volkswagen's scandal about the diesel, that there's a lot more diesel emissions, so the phasing out of diesel, which actually is an interesting segue, right? Not only is the diesel getting phased out, but the entire complex of ICE, internal combustion engines, getting phased out. I mean, just as recent as just the last week alone, you have Australia talking about they're going to stop loaning, providing auto loans to new vehicle purchases, and then you have the government in California, Gavin Newsom, that stated, I think 2 days ago, that they're going to stop banning the sales of all ICEs in California. Well, the question people comes like, can we buy a car and then register the car in California? Who knows? Nonetheless, the direction and the trend is very clear. That it depends on who you talk to in the different studies. I think majority of the consensus, the pegging of the EV penetration, the percentage of total auto sales to anywhere from 20 to 40% by 2030. Well, if anything, based on past records, that the consensus is never correct. So it's either undershoot or overshoot. And I think just looking at the significance of the news that's been coming on and the frequency of the pace of their moving, that I think that is probably going to be SB on the upside, which means the percentage of EVs are going from current penetration around 4 million cars to upwards of 40 million cars, and that will call for 5 times more nickel consumption than what is happening now. So if you think that, Elon's tweet or a statement and with a bit of an uptick on EVs can drive nickel from $10 to $50, what is that future in store? I don't have the answer. Obviously, clearly there is a bit more speculative element to the rise because the market's corrected back. But then as the fundamentals getting more and more bullish and the physical demand of nickel continue to rise, I would not surprised to see a revisit of the March high in quite near future. But then again, I think from technical entry perspective for you, some of the tech traders out there, this is a perfect setup to get into the nickel, because you rather pay a little more to wait for the breakout and then the subsequent retracement to what is now the support, and then to be buying right beneath what was the resistance and holding the bag for who knows how long. And plenty of guys I did for the last 15 years, right? Waiting to excel, which they did. So I just think that in terms of the technical setup, and also the fundamentals are backing and providing that very reasonable, very rational sort of reasoning that really is a perfect setup for now, Matt, in terms of the nickel space.
Yeah, and I think the things that you highlighted on, specifically California as well as Australia, those key points from the government trying to push the ICEs forward. You've also seen over the past 5 years more of a transition of usage of nickel within the batteries themselves, whereas very smaller percentage to now people are overusing 50% of the batteries being closer to nickel. So it's almost like a twofold sort of impact. Not only are you getting the push for greater EV usage, but the usage within the batteries themselves is growing.
Exactly. Well, Matt, let me touch on, you talk about California. We talk about California and Australia. I think there's a big elephant in the room that not being much attention being paid to, and that's China. China's specialty right now is building road and belt, and they have done very well with the nuclear power. So they took the technology from the French, and they took the high-speed rail technology from the Germans, and now they're doing that very well. So they can build power plants. They try to get into the semiconductor industry, but had really sort of bit of a failure on that. And then for the longest time, man, they've been trying to get into the outer space. And you probably know that, the moving parts of a EV is of an ICE for engine is thousands of parts coming versus battery and EV, which is a lot less. So you're seeing that a lot of very strong push from the Chinese side. Therefore, you're not just talking about Western economy, but you're talking India and China, some of the large and most populous countries that are also gravitating towards EV. And your second point you raised was, sorry, Matt, it was a little late here at night.
What was the growth of the
Right, the
actual usage.
nickel's the MNC, right. So
Yeah.
what happened is when nickel started out, and that's why Elon Musk sort of rightly pointed out that their batteries are actually called nickel batteries. You have the lithium, which is the storage of energy, and then you have the cathode and the anode that so depending on the flow of charge, whether you charge or discharging, the electron flows accordingly. So the anode are de facto standard in graphite, which is abundant. It's a derivative of carbon. And then you have the cathode side that's gone from really very low nickel percentage, and that was cobalt dependent, to now shifting towards nickel. And that's why, as I mentioned earlier, there was a huge rise in cobalt, which is now back, had a big correction. Part of the reason is a lot of cobalt is mostly exclusively in Congo, and secondly, just not enough cobalt altogether. And now they're in nickel. Nickel, I think, is more. Nickel is one of the, I think it's the 5th most abundant metal on Earth, but the extraction of that is difficult. But if you do extrapolation, I don't believe that nickel at $10 right now is sustainable. But I think there is going to be equilibrium price where it's still palatable for the EV industry. And then, but yeah, there's enough supply that can satisfy that insatiable demand on the EV side. But the de facto standard now is what they call MMC 811. That is really the standard for high performance batteries that go into modern vehicles. That is really sort of everybody standardized on, from the LGs, from the Panasonic. So MMC 811 stands for nickel is 80%. Then you have manganese, 10%, and then cobalt, that's 10%. I don't see that as standard change. Any other metal substitute is I don't think you can get that much better savings out of it. And I think the chemistry is being tried and true. And that's going to be the trend to come, at least for the remainder of 2030. Not only sort of looking at this technically, but it's also being validated, Matt, from the auto and battery manufacturers that actually have approached us. And the first thing I tell them is, I just want to make sure that this conversation is going places. That is like the first 5 minutes of my conversation with some of the largest auto manufacturers and the battery manufacturers around the world. I said, the earliest I can get the nickel out of the ground from our project in Manitoba will be 2026. And to my surprise, they were relieved to hear that. They're like, whoa, I didn't know. And maybe because you guys are new to the market, because it's got listed in March, but everybody else they talked to was 2029 to 2032. So, well, that caught me by surprise. Number one, that my peers are so far behind from where we are based on now independent research. And the secondly is that these giant auto manufacturers are looking out for nickel, not 2 year, not 3 year, but 5 years or 7 years from now. So that also provided, a lot of assurance for us internally that, hey, we're faster than everybody else. And then they're going after us, even though we can get to our metals to the market fast enough.
Well, I do want to dive a little bit more into Flying Nickel and what you guys have up in Manitoba. You have a nickel resource base of about 722 million pounds. And I made sure to do the math again. It was 722 million pounds. I want you to dive deeper on that. It seems like a really interesting project that has access to some great infrastructure in the area. So not really, I guess, really remote or anything like that. You guys will be able to mine it and be able to get it to wherever it needs to go. So I want to dive deeper on that.
Yeah, but not only 720 million pounds, that's in the measure indicator category. So you add another 300 million pounds, that's inferred. And that just has lesser confidence level because there's not enough drill density. But we believe a substantial of that volume can also be upgraded to measure indicator categories. Altogether, 1 billion pounds of nickel. And I will emphasize it's not only the quantity, but the quality. The nickel resource is open pit optimized, and that is a big difference from underground because the capex and the operating costs and the throughput is very different in nature. But the grade, our project in Minago, the name Minago in the Thompson nickel belt, which is the second largest nickel camp in North America based on historical nickel production of 5 billion pounds since 1959, is 0.74% nickel. So the nickel grades, nickel sulphide, and I will talk about sulphide laterite in a minute, but 0.74 is around double the average nickel sulphide open pit mines in the world. And that grade had dropped from 0.8 in 2005 based on AME research. And that's a 70-year-old metals research firm, very well established. So that 0.4 came down from 0.8 in 2005. And that grade is going to drop to 0.2, 0.25 by 2030, because there hasn't been any new discovery or new nickel sulphide mines going to production because of that long laggard performance in nickel price. So we see this 0.74 is really quite exceptional, only maybe surpassed by Ring of Fire, and that was another Ontario project that requires a multi-billion-dollar capex, and that was outbidded by 2 Australian firms. So when the Aussies are coming, flying all the way from Australia, bidding for Canadian assets, you know something is up, and they bid it up, ending from, I think it was 40 cent or 30 cent stock to become $2, so something like sub 50 million market cap to $350 million. Again, that's a foretell sign when the BHPs and Wailus are going up ashore to Canada, bidding up some asset in the middle of nowhere. So compared to our peers on other ventures or TSX exchange, their grades are averaging 0.2 and 0.4 and 0.4 at best, and we're 0.7. That's open pit optimized. Secondly, I think so, it's not a matter of who's got my analogy, it's not a matter of who's got a bigger gun. You can find some other juniors got 1 billion, 2 billion, 3 billion pounds, but talk about their capex and talk about their energy usage, because to get the same amount of nickel with a lower grade, you have to grind a lot more stuff out of the ground. And the second point that just elaborated about our resources is literally 1.5 kilometer from the hydro line from the highway. And that highway is what Vale Thompson, what Vale used to truck their current Thompson concentrate. As I mentioned, it was the second largest camp, but still produced decent amount of nickel, around 30 million pounds. Well, I think it's around 30 to 50 million pounds a year, down to a separate smelter. So we have a very well-established infrastructure. And not only is that, because we're in the heart of the Thompson nickel belt, and the mineralization is disseminated open pit, very analogous to what Vale has been mining in Thompson for the last 100 years. Used to be Inco, as you are familiar. So we believe that we're very confident that our concentrate is very compatible to the smelting setup in Sudbury. So we have a complete ecosystem of which we can tap into, and will just be an add-on to a already very well-established and well-oiled system and process in place, Matt. So I think there's a lot to talk about, but not only do we have one of the highest grade open pit optimized nickel sulphide project in North America, and we have very well established infrastructure, we are very confident that our capex will be under $1 billion. And the third but not least, the project had over $50 million of investment. We bought the project in 2021 from that distressed situation from another vendor for 20 million Canadian, which is about half debt and half cash. And the project really didn't have any flaw, but it sat dormant. It had all that investment went into before 2010. It sat dormant for 10 years, and that is not unusual for many other metals projects of some of the probably people that interviewed, because the commodity has been set for for that 10 years, not just for nickel, but for copper and for gold. Had a flash of brilliance, and also for silver, but by and large, all the metal has stuck in that trading band in the last 10 years. Nickel was no exception, and this project is no exception. So the project has gone to all the way. We only found out after the acquisition. The project had once been fully permitted in Canada in 2011. And we were really blessed that when we reapproached the government in 2021, when we bought the project, that we found out that the permit is still in good standing outside of a minor notice of alteration. Right. So we raced in, we completed that notice of alteration, and we submitted our submission. We did the technical study to show that we can satisfy this alteration, and we believe that the environmental act license will be rectified imminently this year. So, Matt, I think it's interesting that we have this conversation, because in March, when I came on interviews with a couple other hosts on YouTube, and when I say that with a budget of $8 million, of which we still have $3 million in treasury, that we can achieve, we can transform this project to have a feasibility study that's completed, to have some infill drill holes and wildcat drill holes, of which we're going to release the results very shortly in about 4 to 6 weeks, to put the project on the map, to rekindle the passion and the glory of what it did. It's over $100 million market cap, the company back in 2010. And not last but not least, to have the project fully permitted, be shovel ready, all in 2022. And the people are looking at me like, what is this guy smoking? But you know what, slowly and surely we are, even though we've been through a bit of summer doldrum and the assays were late to be released, just like everybody else, and we're not getting much love, and because it turned out that the nickel at $50 in March was the climax, right? Was the peak, and we debuted it. We traded tens of millions, over 10 million shares. Our stock doubled on debut, 100 million market cap. It turned out that was the best, but not the last, at least for now.
Yeah, not the last.
But however, but now it created an entry point. Never would have imagined that we peaked at $1.40 with $1 million shares trading a day, to where we are at sub 15 cents, which is a tenth of what we traded only 6 months ago, and it's half of what we paid for the asset a year ago, and it's about 1/6. It's a fraction of the total investment that had gone into the project. If somebody to replicate where we are now, assuming that a discovery is even like from the point, the first hole you made a discovery, and then to where we are with the study, with everything, it's going to take you like 10 years and about $40–50 million. And I think that would be the conservative side, given the rate of inflation we're looking at, because 86,000 meters drilling at today's rate is going to cost $40 million. As we found out this year. So we're really in a very special situation. We are cashed up. We don't need to tap into the capital market, at least for the next 6 months. And if we do, Manitoba is one of this, what they call the super flow through province, that we can raise funds at a premium to market. And that, Elon is out there doing deals with Vale, with Indonesia, with Madagascar, and he is, and then also with other juniors, nickel junior traded in the United States. So it's clear that he's going after nickel big time. And BHP, after failed to get Noran, which lost to Wailu, made a $5 billion takeover bid of Oz Minerals, which is another outfit in Australia that specializes in nickel and copper production, but that failed. So it's very, very clear to me that this correction is not the end of the nickel bull per se, but it's a very normal course correction. And man, I could spend another 20 minutes, as you know me, talking about exactly what happened on the long side and the short side of the nickel. And it was, London Metals Exchange is linked, is owned by the Hong Kong Stock Exchange, which is the part of the Chinese government. And the largest nickel producer in the world is from a Chinese outfit. That was very short on nickel. Because I think industry insiders and mining companies, they always see the supply side. They don't see the demand side. So they were very short on the LME nickel. They never saw that what's coming. And the guys had a paper loss of billions of dollars and cozy up with LME. It's factual. And they hold the stock. They put a limit, down limit, and buy limit on it. They did everything by the book. They let you roll over without settling on the trades. So can you imagine that you can actually roll over your short position without delivering? That's all these unprecedented actions costing $1 billion lawsuit. So on the LME, they managed to muster the price spectrum before the short squeeze started. And you know what, man, with these people that are smart and seeing the buy side, the buying power side now, I would not be surprised of the guy that go from short to flipping on the long side, which is exactly what he did in 2019. So it's a very dynamic market that really deserves a bit of study by your audience, for anybody who hasn't really gotten into the nickel market or nickel juniors or nickel mining companies that have heard about it and just not sure what the entry point is. I'm just saying that I think this is a once a decade, if not once a generation opportunity to be getting these nickel juniors, or some of the trading $1,000, $2,000 trading volume a day. I mean, that's just really silly. And we are, I bought about 500,000 shares of FLYN Nickel at 50 cents, and I haven't sold a share. I just think that in terms of the fundamentals, this is one of very rare occasion where the fundamentals marry with the strong technical. but the fundamentals operating that sort of a big blowout and then building back on very, very strong support. That creates just is a very high, I believe, a very nice entry point in terms of risk and reward.
Okay, so what catalysts that we should be looking for in Flying Nickel or assays coming out in the next couple months, or maybe imminently, as you mentioned? And then you mentioned some of the studies that you had been done with. Was it a PEA that you were going to be coming out with in 2022? Okay.
Right. So in the short term,
I'm sorry.
There are three major catalysts. I think in the most immediate term, there's nothing that sort of give a bit of confidence to the market and assays, given where the exploration company was sub, 20 million market companies, unbelievable, but that's where we are right now. So we expect to have some assays. These assays are drilled in previous exploration areas, so not the main deposit. It's called the North Limb, which is 14%, constituted 14% of that 300, that billion pound resource. But they're only drilled down to 200 meters. So we put a couple holes beneath that 200 meter area to 500 meters. So if we're able to prove or discover additional minerals beneath the 200, that would be sort of, that would make it that satellite area as a bona fide discovery, but potentially be adjointed because they're only kilometers apart from the main nose deposit. So you can maybe looking at a contiguous tubular structure, not just a sort of rounded over tip, but you got that tubular structure extended to the north. So that's very exciting. The project had a feasibility study in 2009, of which we're really kind of updating that study with parameters. I mean, even though there's inflation, but then the loonie, the loonies are down. The Canadian dollar is down from back then. The study was on parity. So I think there's some trade-offs, not just the one-way street in looking at studies that's on the downside. And then third but not least is the update on or providing hopefully good news on the environmental permitting, and that will upgrade that project to shovel ready. One other thing that I think I forgot to mention is, in terms of being the highest grade, and potentially the project be shovel ready before the end of the year, and that will make this project probably only a handful of all mining projects in Canada, not just nickel. I think nickel will probably be the only one this year, because everything got slowed down from getting a passport to everything is just slowed down. But in terms of this project, could potentially be the greenest nickel project in the world, because the powers come from Manitoba power, which is hydro, 99% hydro. And because the project is hydrometallurgical, which means it's a nickel sulphide project, we produce conventional nickel flotation concentrate, which we don't require any burning or pressurization or acid, unlike our laterite counterpart. So the carbon emission per unit of nickel produced is up to 99% less than the laterite counterparts in Indonesia and in Philippines, because their power is from coal-fired power plants, and they have to resort to applying 50 times more pressure than atmospheric pressure, heating up the chamber to 300 degrees, maybe more, in order to separate that nickel from the nickel laterite. So we have that distinct advantage, one of the highest grade, the greenest, and one of the fastest to market, even though 3 years might seem eternity compared to our peers. We can bring the market metal twice as fast. So you're looking at, even though we're sort of the baby throwing the water amongst all the other nickel juniors out there, in the weeks and months to come, you're going to see ourselves being set apart, even though we're not the highest resource, even though we have that exploration potential of 200 square kilometer of land package. But overall, in the end, it's about the exit strategy. Do we have the goods to deliver to the majors who are looking for a nickel project? Or do we have the economics that, because of our grades and our infrastructure, that we can eventually tap into the market and get the project financing, get the banks to finance us, get the equipment supplier to finance us? I think that we do have the optionality. And then it's not going to take long. And September is rolling around, traditional strong metal season. Now we could be looking at some of the nice, sort of redemption and getting out of that summer doldrum and starting out with a very fresh nose and getting on in September, which is only about a week away.
Now, I do want to end with the LOA that you had just entered with Nevada vanadium. Curious if you could dive and finish up with that.
Yes, on that 60 seconds. The company on Tuesday, a few days ago, signed a letter of agreement to merge with Nevada Vanadium. So both vanadium and nickel were once sitting in the parent called Silver Elephant, which I ran for the last 10 years. And it was because those assets are advanced to a stage where they can get off and look at project financing. Unfortunately, the metal had a bit of a setback in the last 6 months. So we're looking to merge the two companies to form a critical mass to increase liquidity to get through to the to get through to the end of the correction, the end of the tunnel. It could be 6 months away, it could be a year away, while providing that opportunity to leverage the company to exposure on both vanadium and on nickel. And vanadium, just real quick, it's an energy metal. It's used in batteries in the utility scale, large scale utility energy storage to complement the solars and the wind. And typical deployment could be 100, 200 megawatts. So I mean, that is like 1,000 times more capacity than using a car. So it's a very different nature, but they're all both energy metals. The companies are doing due diligence right now. So it may be a few months later that I can provide, maybe come in your program to provide an update. The acquisition of vanadium is not so much about getting more pounds in the ground, but that project is also very advanced stage. So does have that synergy and leveraging a common administrator to reduce administrative costs, overheads, and then enable us to continue and gaining that liquidity and a bit of a critical mass to help us survive and ride out this current metal correction storm.
Okay, excellent. Well, that was a good synopsis, very succinct. John Lee, thank you so much for talking and educating us today about nickel. I'm very curious to see how it pans out in the future, as we discussed, obviously, the increase of EVs themselves, as well as the increase of usage within with nickel within the batteries themselves, coupling for a huge uplift potentially in demand in the future. Looking forward to having you on in the future as well. Is there anything else?
Yeah, and Matt, and just real quick at 30 seconds, we just started really the social media push, given we're just busy sort of getting our programs executed. So come September, I've been on a few programs on YouTube. You can look me up at John Lee Fly Nickel. And we've done a couple of interviews, got 50, 60,000 views. And also visit us at flynickel.com, FLYnickel.com. There's a technical study right on the homepage, and the presentation, they're all freshened up and brand new since just last week. And then you also can look me up at Twitter, which I'm quite active, about 2,000 followers. I'm a chartered financial analyst. And I call the market, I do a sort of daily update on the market and call the outlook where they are. And the handle will be that John Lee at Battery Metals. So look me up there. Thank you, Matt, for the opportunity.
Yeah, absolutely. Thank you so much. And hopefully to have you on the channel again soon.
Will do. Thank you, sir.
Thank you.